where is Bitcoin going? Where are the altcoins going? Where is the stock market going? All of those questions are interesting, and estimating future outcomes is very interesting. Trying to improve skills to become better at those estimations is also interesting, but it's actually not the main thing. It's very entertaining, but it's not the main thing to create wealth, to build wealth over time. It's more important to have an idea of how to allocate based on different outcomes. Because when we make estimations about something in the future, right? When we think, okay, there is a certain likelihood that Bitcoin goes up from here and goes down from here. When we make those estimations, we are never deterministic about this, right? We never say, I will believe Bitcoin hits 100K, and if it doesn't, then I lose all of my money. We have to think about this in a probabilistic manner, right? We have to think in terms of probability. We think, okay, the likelihood of Bitcoin going up is maybe 70%. The likelihood of it going down is 30%. And thus I take the bet. But in case it doesn't play out, then I will react differently. So do you actually have a strategy based on different outcomes from here? As in, what would you actually do if Bitcoin was to suddenly rally to 100K? And what would you actually do if Bitcoin was to go down to, say, 30K? What would be actually your action plan? And what would you do with your altcoins? What would you do with your stock? Have you ever really thought about this? Because it's very, very important to be well prepared. If you never thought about this, right? What would you do in case Bitcoin drops to, say, 30K? Then you're probably not prepared. Then you probably might not have money on the sidelines to deploy. You might not be ready to, say, sell some of your stock to then buy Bitcoin. You might not really have a nice balanced portfolio where you can actually take advantage of dips and of course also of rally. I believe most people actually don't really have a strategy. They're simply just winging it. They think crypto is going up, so I'm going to buy some. Then they get excited because they make some money. They put in more, then they get even more excited, they make more money. They allocate more and more and more as the price goes up. They're not taking profit, they're doing the exact opposite. Then the correction comes, and then all of the profit that had been made in the prior month get destroyed within a single week. I think this is a very typical scenario. This is what mainly happens because attention rises with rising crypto prices, right? More and more people get onto this, but also the reversal happens very quickly. Because if you buy, say, an altcoin for very cheap, you get a lot of those tokens for a relatively low amount of capital. Now, when the price goes up, right, let's say the price 10x's, you still have the same amount of tokens if you didn't sell. If you then decide to sell, then you're really crashing the price because now obviously you've got way more US dollar value after the 10x. And so what tends to happen is that we build up relatively slowly, but when we go down, we crash very, very fast. And most people aren't prepared for fast crashes. Most people don't really know what to do in those situations. And most people simply just increase their risk exposure because they feel more and more safe in the current momentum, but then suddenly get completely wrecked.
Here's the problem with crypto YouTube. People promoting becoming degen or buying 100x coins. That's what gives clicks, but that's not what's going to bring you forward. I refuse to take money from centralized exchanges. I refuse to take money from crypto projects. I refuse to pump and dump a coin and filling up my pockets in the background. I don't do any of this. Instead, I share my knowledge in the form of tutorials in the premium membership. So that's content that won't do well on YouTube, but that builds up skill over time. You can also directly contact me over there. You can directly pick my brain. Feel free to check it out. TheBitcoinStrategy.com is the link.
So what's the solution to this? The solution to this is to do the exact opposite, right? So instead of feeling comfortable in the positive momentum, doing the exact opposite, trying to take profit as we go up and trying to buy the dips as we go down. Now we can't buy any dip, unfortunately, because more often than not, especially for many altcoins, when it dips, it continues dipping. There's a lot of altcoins that can go down by 99%. If you just the dollar cost average your way down those 99%, they're simply just throwing good money after bad money. There are some assets where buying the dip usually makes sense if you've got long enough of a time horizon. Bitcoin is one of them. There's also stock ETFs, right? If you buy, say, a NASDAQ 100 ETF, if it suddenly dips hard, you can buy. If it dips more, you can buy more. There will be a recovery at some point, and be it simply because of monetary expansion. For an altcoin, that's not necessarily the case, because an altcoin might expand even faster in supply than the money expands. So that's then what the early investors get, that's then what the team gets, etc., right? They want to be rewarded for building their product as well. They get the allocations with a delay, they get investing, and then they sell off later, increasing the circulating supply, depressing the price. And normally that increase in supply happens relatively fast. So ask yourself, what would you do now with your altcoin, say when Bitcoin hits 50K? Would you be selling your altcoins? Would you then be buying Bitcoin for it? Would you quit crypto altogether? Would you sell some of your stock to then buy some Bitcoin? What would you actually do? It's very important to think about those scenarios beforehand, because once we are in the scenario, right, once we see the crash, emotions can be high, especially when risk exposure is high as well. Let's say half of your money is in altcoins, which, by the way, I would not recommend, right? But half of your wealth is in altcoins, and then the altcoin suddenly on a single day crashed by 30%, then the emotions are high, right? You're really wondering, what should I do if you haven't pre-planned this? And you might not do the optimal thing, right? You might not even think about selling some stock to buy the dip, or maybe convert your altcoins into Bitcoin. You might simply just hit the sell button, put this all into stable coins, and then in the end the altcoins go up again by another 5 or 10%, because some people buy the dip, and then you FOMO in just to then see another crash. It's way, way better to think about this beforehand. I personally have an approach with target allocation. So I split up my wealth in different pockets. I think this is my money I've got in property, this is the money I've got in crypto, this is the money I've got in stock and in long duration bonds to bet on potentially falling interest rates. I've got those different pockets, and I've got an allocation to each of those pockets. And in case there is a big swing, and this mainly happens, of course, in crypto, in case there is a big swing, then I rebalance. And my target allocations are not necessarily fixed, as in I don't say I want to have 30% always in Bitcoin. I have a range. So I say I want to be between 10% and say 40% in Bitcoin. And when it goes up a lot, when we are riding the wave currently, right? And when potentially the long-term holders are selling and we're already somewhat heated, and I feel somewhat not that comfortable with future upside potential, then I want to be on my target allocation scale rather on the lower end. So I want to be closer to the 10% allocation than to the 40% allocation. So I take a lot of profit on the way up, and vice versa, right? When we suddenly crash in Bitcoin, Bitcoin suddenly goes below the realized price, then I want to be rather closer to the 40% allocation. So this is how we can buy low and sell high without necessarily having to predict the market that well. Of course, it's always good to have some kind of model, right? For example, the realized price, to have some kind of an idea what currently the masses are thinking. It's normally not that hard to determine this, right? When there's a lot of meme coin trading going on, we are probably not in a bear market. Thus, we probably shouldn't have massive risk exposure and rather consider taking profit every now and then. But still, it's nice to quantify this. Still, it's nice to have some fixed rules. It's super important to have a strategy. It's super important to be prepared for whatever outcome happens. Because again, we can't be deterministic about this. We have to think in probabilities. Nobody has a crystal ball. And so that's the message of this video, right? I simply just encourage you to think about the overall portfolio and think about the different scenarios, how things could play out, and what you would do in that scenario. So that then once one of those scenarios becomes a reality, you know exactly what you do. You've got a very nicely well laid out plan. If it's the first time here, feel free to subscribe. I probably feel exactly a like would be very much appreciated as well. Feel free to also check out our Telegram channel. It's free. Link is down below. See you over there. Cheers.